Hello, Matthew. It's nice to see you today. My name is Matthew Hornor, President, CEO, Director of Maple Gold Mines, operating in the Abitibi Greenstone Belt of Quebec, Canada, the number one rated mining jurisdiction on planet Earth. I'm happy to say we have a 400 square kilometer land package partnered with Agnico Eagle. We have a maiden resource of 3 million ounces and growing, and looking forward to coming out with some interesting results in the not too distant future.
Matthew, lovely to see you. I haven't seen you since July. Where have you been? What's been going on?
Just hard at work drilling. That's what's been going on.
But do you think that was the right call? Because you've got to get the story out there. And I think I noted last time we spoke, I said, quite frankly, what's not to like about this story? But I felt you needed to talk to the market more. But you've kind of been quiet on that front.
If you ask my wife, she would have a different opinion about the days away and the marketing we've been doing, going to the normal conferences and being out there on social and doing videos. But yeah, in some respects, the market wasn't really there for that. The appetite for these stories wasn't all there. So although it may seem that way, we've been hard at work trying to message properly, and we always strive to do better all the time. And with the upcoming information, I think we'll have more to talk about.
Right. Okay. So let's maybe do a reminder then for some of our audience with regards to the assets. 3 assets we're going to talk about. So what have you been doing since we last spoke on each of those? Any order you want.
Let's start with Eagle. Eagle, if I can remind the audience, is a project that we own 100% of. It sits just adjacent to Telbel, and it's in the Jutel land package that Agnico contributed to form the 50-50 joint venture. On that project, we did a 7,000 meter program completed end of last year. The results came out in mid-January, finally. The results confirmed exactly what we had expected or hoped, and then some. There are very large high metal factor corridors there, parallel trends coming together, sitting next to the historic mine horizons that really confirmed what Agnico had drilled off, because they were the operator back up until 1993. That there was a tremendous amount of high-grade material there, and we wanted to confirm that with our own program, and we did that. So that came out to the market, and we were quite pleased. The additional work we were doing at the Telbel project, sitting just adjacent, was to test 3 targets at depth. And when I say at depth, they're talking down to 1,600 to 1,800 meters and even deeper. That is because when we ran our 3D digitization model, it showed us that they left behind some incredibly compelling high-grade targets when they shut the mine down to go build LaRonde. And when I talk about high grade, I'm talking about 80 grams, 15 grams, 12 grams, 10 grams that were left by them and not followed up on. Just as a reminder, back then, Eagle Telbel, they were mining $350 to $350 per ounce gold price. Their average grades were 6.5 grams, and their cutoff was 6 grams. So this was a very profitable mine for them, even at much lower gold prices. So that's what we did at Telbel, and the news and assays from that endeavor will be coming out in the next weeks and months to come. Finally, with Douay, again, we have the benefit of the best partner any junior mining company could ask for in Agnico. They're very supportive for what we're doing this year, which is testing the deeper structures that sit beneath the 3 million ounces that we've already identified. Why are we going forward with that program? They had success at extending the Malartic mine. And for the audience, Canadian Malartic is the number 1 gold producing mine in Canada. They own it now 100%. They're mining there at 2,000 meter depths. They find the ounces there in the sediments. And they extended the life of that mine considerably with this East Goldie discovery, which was to the east of Malartic, and extended that by decades. 6 million ounces at high grade, probably going to ultimately be double or triple that number of ounces as they move this forward. So we're looking for something similar at our project based on their successful track record at a very similar sized age of rock, depth, etc. at Malartic.
Right. Okay. So you've got 3 projects, advancing them through the drill bit. I'm trying to build up a picture of, given the track record of where you've worked, where the teams come from, and your expectations, and Agnico Eagle's expectations of you. You've got to get the right sort of data to tell you very, very quickly whether you advance each one of these projects or not. You mentioned some super deep stuff there, 1,600, 1,800 meters, right? The grades are good, different environment though. We've had inflation kind of rip through mining at a great rate of knots. COVID hasn't really helped. And we're seeing economic studies just blown out of the water. So for you, what's the best use of your money to work out whether it's going to be an economic 3 million, 4 million, 5 million, 6 million ounces versus just having ounces in the ground? What do you do?
Well, we have to run our analysis carefully. There's Laurentian Bank and Paradigm came out with positive economic analysis for what they consider the mine to ultimately look like. And I invite everyone to go take a look at those. Considerably higher share price predictions, et cetera, et cetera. What I do as management of the company, though, is to look at Eagle Tellbell. We have a prior producing high grade project, which means all the underground infrastructure is already intact. As you know, Matthew, building a mine underground is more expensive than building a building in the air. You don't have to move air to put structure in place. To put structure below the ground, you actually have to muck it out and do a lot of things that take a lot of time and a lot of capital. Luckily for us at Eagle Tellbell, that underground environment still exists. The shafts are in place, all the stopes are in place. We'd have to dewater it, but extending something and building on what was already there is a far more efficient way of approaching a project than if you're starting from square one. So that's one way of looking at that, as a very compelling potential restart opportunity for us. And given what's happened in the Abitibi, there are a number of very, very important restart stories, namely Malartic, which nobody thought was going to work back when Sean Rosen picked it up and it was $14 million market cap, and everyone thought it was a waste of time. You have to move a whole town, et cetera, et cetera. We know what happened there. It turned out to be a multi-billion-dollar sale to Agnico and Yamana, and the number one gold producing mine now and will be for many years to come. The restart stories are all over the place in Abitibi because of the change of the gold price environment. And people, the best place to build a new mine is they say, in the shadow of a head frame. We've all heard this, the old adage, but it is always true and very true in our case. So that's how we do it on that side. At Douay, the deeper drilling has got to be something that we get paid to go find. So we'll get paid at the near surface 3 million ounces plus that we've already delineated. Then finding where the deeper plumbing sits will drive the exploration efforts and also the economic studies and analysis.
No, I appreciate all the kind of cliches. Okay, this is true, that's true. I'm more. I want to get into the weeds with you guys, right? You've got a good team there. You've got some good assets, obviously, with Eagle Tellbell. It's 100% yours versus the JVs that you obviously got on Chital and Douay with Agnico. So is that what you're now viewing as your flagship? Because obviously you've been paid to work on the other two projects and it's 50-50 JV. Are we looking at the Eagle as your kind of focus, your flagship? Is that right?
Well,
is that where your money's going?
Our own personal money has got to pay for that, and it sits next to Tellbell. And it was a one mining operation in the past, and it will definitely be in the future. The joint venture, Agnico, will have to buy it from us to the benefit of our shareholders. So that's a good thing for any Maple Gold shareholders to look forward to as a potential upside win. So yes, we wanted to confirm what they had found in the past at Eagle, that there's high grade material left behind. Of course, that has positive impact on what's happening next door. When I say next door, they're literally connected through a drift underground. There's the Eagle shaft and the Tellbell shaft. They started shallow and they started with this deeper plunge. When you take a step back, and one of the key technical advisors, which we named since I last spoke, is Paul Harbidge, who's a very well-known mine finder. He's had a number of incredible wins in his past, Randgold, et cetera. He was blown away by what he saw as a world-class potential of all of our projects. And also, if you think about what are we doing actually at Eagle Tellbell, we have to confirm that there's sufficient mass to actually go and restart this and pay for the effort. But when you take a step back and you look at what the airborne mag and geophysics showed in the past, that showed this trend going from Jutel all the way onto the Douay ground. It lit up like a Christmas tree. And so that some of the past explorers were on there drilling away. What they didn't know, because they didn't have the data, because the digitization hadn't happened until we took this on, was that actually it's plunging very clearly from where they started the effort, the mining effort, to where they ended, and that it looks like it's going further down. So if you think about it, here they are. Here's the Jutel deformation zone heading to Douay. Here's where the plunge is going just down. You can see this from the slides. They were just drilling too shallow. They didn't actually hit the targets that we can see is definitely lining up from where it's plunging down and from where they were mining in the past. So we have the benefit of all this data, real data that's showing exactly where the plunge is going. And so we take a real step back and say, what's really happening here? How can this be a multi-generational, very large gold camp, which is what I believe it to be? It's only if the plunge continues, the pearls on the string kind of is a really important factor to consider in any mining situation, any geologic setting. And I think that's something we definitely have at the Eagle Tailbell project, and it's going to continue, I think, all the way on back onto Douay. And I think this will be something that's important for many years to come. This is why Agnico is involved.
Right, and does it kind of get a little bit grey then? It says you kind of got the two projects with the Agnico JV there. You've got your own project, but are the lines getting blurred a little bit as a result of what you're finding?
I don't know if blurred is the right word. I mean, there's positive impact of one on the other. So if you call that blurred, I would say it's I'll put it a little differently. Yeah.
Well, it's just in terms of your strategy. Do you know what I mean? You know, when we spoke, you had a very kind of clear, this is how we're going to approach this thing, but you're kind of like finding stuff, good grades. It's kind of, even like you said, better than you thought. So, well, perhaps that strategy changes somewhat. Maybe in terms of maybe even Agnico looking in and go, well, actually, do you know what, guys? Maybe there's another conversation to be had here. I'm just trying to understand how these things evolve.
Yeah, I mean, there's no way I don't think it's impossible to imagine this getting restarted without combining those two. So that's another way of putting it. One will impact the other positively, and you can't deny the fact that what we found at Eagle is important. And next to our Tellbell, when we've come out with the results of the deeper effort, that's not going to be, no mining company, no junior mining company is made on one drill program. That's just not the way it works. There are going to be more campaigns. It's going to have to go forward. Absolutely. But what we're finding so far is compelling enough to keep us going. And that's the important thing to keep in mind. But what we're going for is not something very small. We're not going for the scraps around what they've mined in the past, a couple 100,000 ounces here and there. We're going for what is really happening, which is something they didn't look at in the past. And we're now looking at for the first time. What is really happening with this structure? How did it plunge? What is actually the potential size here and impact of this drilling effort?
Right. Okay. The reason I'm asking is because everything you just said is going to take money.
Yeah.
It's going to take time, which is also money. And if you look at what's happened last year in terms of share price destruction for most precious metal companies, it hasn't really got much better in the first quarter of this year. So it's a case of, well, do we stick with a strategy? We burn through our own capital, or have we got enough here? And I appreciate what you're saying is like, one drill phase isn't usually enough, but given the capital structure in last year, given the fact that this thing looks like it's going to need, additional capital over, the next 2 or 3 phases, is there conversation with Agnico? How do you introduce new capital in there to do things you want, or do you say, well, actually, maybe a more efficient way of doing what we need to do is X, and I don't know what that is. So, what are the conversations that you're having, given what the new data tells you?
Well, even if bottom line, I couldn't even tell you if it wasn't public, the conversations. But we're completing the year 3 of working with them, and their capital. We'll have year 4 coming up next year, which is the last year of the joint venture, and then we'll have to think about how this proceeds forward. Are there other parties involved? What do we do from an efficient way of capital raising standpoint? How does that make sense? Do we look at M&A opportunities to grow the platform itself, which I think would make not just us but the whole sector more relevant? I think that there's too many junior explorers out there. You need to have a number of them, but I think we probably have too many. So those would be a way, if you can find creative ways to come together, a smart way to tackle and answer the question that you just asked me. Like those are definitely conversations we're having with other groups to figure out how do we team up to bring more wins to our shareholders. And this is something I think about on a daily basis. So there's no easy answer to that, but we have to look at all aspects of the market. And people go, why would you want to do anything like that when the share price is down? Well, on a relative basis, nothing's changed. If everyone else is down more, it could be accretive because then you become the name that people need to own because you're actually moving and shaking and making things happen. So these are the conversations we're having for sure. And that's what I can tell you about.
Those are the conversations. Right. Okay, fine. I understand that. But, you tell that to someone who bought in at 30 cents, right? They're going to kind of care that what's going to happen, right? But you said something quite important there. You said something that like this sector needs more consolidation. It needs a lot less stories out there. It needs a lot less companies destroying value out there because it has an impact on the industry as a whole. Right. That's a real thing. So in that backdrop, what are the things that you would point to about your story, your company, your people that you think are important and meaningful and have a kind of, reality, fundamentals to them that perhaps other stories which are just maybe a little bit more white noise-ish? What's so special about you guys?
It's very real that we have the ounces that we have. We have north of 3 million ounces. So $2,000, it's, in situ 6 billion. And you take off, I don't know, 80%, you're still left with 1.2 billion versus our market cap of 50 million. So even if you give massive cuts from a conservative financial modeling basis, there's a clear thesis for owning some shares. That's real. We're sitting in the best mining jurisdiction on the planet, which is Quebec. That's important. We're not in South Sudan or some other places that you don't know what's going to happen and you're not being nationalized, but like what's happening in South America. So people can at least be calm about the fact that we're in the greatest place. We have great resource. We're in the greatest place to mine on planet Earth. It's, I always think about it, it's like if you have 50 million ounces of 10-gram material and you wanted to develop under, I don't know, the Louvre, it's never going to happen. It just won't happen. If you had that here versus Sudan, you can understand the value difference. So we have a great jurisdiction. We have a great number of ounces that's growing year on year. We have a team that comes from a lot of large mining companies and have the experience to actually do what it is that we're doing from a capital markets standpoint and also from a technical standpoint. So across the boards, I think we have something that stands out in the crowd already, and it would be a benefit to anyone watching to keep paying attention to what we're up to for those reasons. There's a lot of, and I don't want to disparage, geologists because you can't have a strong junior mining presence or a company without really, really good geologists. We think geologists are gods. So let's preface what I'm about to say by saying that statement. That being said, often the case where you have geologists running mining companies who should be focusing on the project, not on running the company. So the symbiotic nature of how Robert Friedland operates his company, what I learned from him, working for him for many, many years, over a decade, was that dance between the capital markets team, the technical team has to be very tight, and they have to work together as partners to message what's going on, but also understand how to move a project forward. So it's a tricky business. Robert likes to say, and I think he's right, mining is not for the intelligent. It's very hard, but when you get it right, it's a fun place to be.
It can be. It can be an absolutely fun place to be. Here we're saying there, because you're saying that's how we stand out from the crowd, and there is a big crowd here. And I agree with you. Consolidation for sure, or just quite frankly, I wish people would be a bit more honest and shut things down early. With regards to your money position, just so I understand, whether I get the Agnico JV and paying you, and you had 10 million at the end of last year. Where are we at today?
Yeah, just under that. I haven't looked at today, but it's 9, something like that, something in that range.
Okay, so again, you've kind of got optionality there in terms of if the market does kind of remains stagnant, and I can't believe gold is this year. I found it quite a bizarre environment
Where's
as
it?
a
Where's it
gold.
trading today? Around 2,000, right? Just under.
Yeah. Right? You'd have taken that all day, every day, if I said that to you at the beginning of 21 and 22 and 23, right?
Or 17 when I first started this company. When I first came to this spot, it was 1250, I think, or 1300. Said if it gets to 1450 or 1500, we're good, because we assume our costs are going to be around, lifting. It's going to be about 1,200 bucks, 1250 ish.
It's quite bizarre. I mean, I mean, does that kind of weigh in your mind? I mean, again, intrigued about when you go to bed at night, when you wake up in the morning, you're thinking about the share price. But in terms of the market drivers for you, can you make sense of them right now?
I think the world is watching other commodities. They care about battery metals a lot right now. Some other sectors are taking some of the wind out of our sails. For a time, crypto, a lot of people are confused and believing that crypto is actually a store of value better than the best performing commodity, which is gold over the last 26 years. Crypto is a sneeze by comparison from a times perspective, how long gold has actually been money for human beings on planet Earth. For the last couple of years that crypto's been around, it's literally not even been a sneeze. Sneeze is too long to describe their relevant importance as a store of value over time. But that is having an impact. And I tell you, watch out for the next little while. We're going to come up with some interesting campaigns on trying to bring some more eyeballs to the space with people who I think will speak to the general audience about why it is that what we're doing is important, and why owning these junior gold stocks gives you a tremendous leverage to the upside as the gold price continues to increase. I think with all markets, as we've seen in the past, the market always does what is required to confuse most of the people all the time. I think when it actually transpires that the junior gold equities have their run, it's going to happen, unexpectedly and dramatically, and you want to get in before that. I think when the momentum hits this space, which I think it will do, human beings have been around for too long for that not to happen. And keep in mind, the population of the Earth isn't what it was 100,000 years ago, 10,000 years ago, 1,000 years ago, 100 years ago, or 50 years ago. We have an exponentially growing human population and a linear supply line. I could work this out in high school, age 10, 10th grade, 11th grade, working with Mr. Thorne, my economics professor. I looked at those numbers. I said, that means that the commodities, generally speaking, over time are going to go up. That's it. We grow exponentially as human beings. Linear supply means there's a big gap between the two. So it's not just my theory, my opinion. This is exactly what is happening. We see the gold price increasing. We see all commodity price increasing, home prices increasing. You layer onto that what's happening on the macro scale with political uncertainty, wars, banks collapsing, inflation, et cetera, et cetera. This is why I think this year gold may actually touch 2,500 or even higher this year with some dramatic some dramatic catalysts. And if you want the torque, owning junior equities and ones in safe jurisdictions like Canada is a good place to go.